We are back here on another XRP podcast, and we have the infamous now, Mr. Stephen McClurg, coming in from Canary Capital. How are you, Stephen?
I'm fantastic. Thanks for having me, Paul.
So we're going to get into, obviously, the launch day of November the 13th and what we will see around XRP future, especially around ETFs in general. What a day, though. I think when you look at the numbers that were coming in, when we saw as it started to rack up 58 million on the first day plus, and then 245 million in inflows, biggest ETF launch of 2025. So congratulations, man. What a barn burner that was. Were you guys expecting that kind of day?
I think we actually were. Well, up until the day we expected it, and then when we saw the markets down overnight and a terrible opening, we thought, yeah, there's no way that this is going to take off. But the XRP army's strong, so
Yeah.
We had quite the day that day.
You know, I just wonder, and this was something that I got in a chat the other day on Twitter about with several. It was just a quick, Twitter space, and it was talking about the impact of the market as opposed to the traditional investor and institutional capital. What do they look for? Because obviously institutional capital is much more longer framed than what we see right now with some of the crypto investors. Do you feel that we are in a position right now where institutional and to a certain extent, maybe a certain category of retail are starting to look much longer in their frame of where they want, the investing cycle to be? Is this something that ETF investors are doing more of?
It really is. So if you look at the traditional crypto markets on exchanges, you definitely have momentum strategies moving.
Yeah.
If the market's down, people are selling. If the markets are up, people are buying. But ETFs are a little bit different. One of the things that we noticed that day was the amount of volume and, of course, the amount of inflows that were coming in to that ETF. Both of those breaking records for 2025. And when that happened, what we realized was, well, look, people know that the markets are down, and they're smart investors are buying this, knowing that it's a good buying opportunity. And I do believe that day was a good buying opportunity. All through the weekend, even today, has been a great buying opportunity as well, especially when you look at the broader market. Crypto in general has a lot further to go to catch up with the broader market risk assets.
Well, as we're recording, Bitcoin holding under 94 right now at 93, I think 93.9, and reporting. And not only that, let's not, walk away from it. I mean, altcoins absolutely got decimated last week. So including XRP, which could open up because there's been a lot of people on speculation that this validation from Wall Street into the XRP ETF has only made that token stronger in terms of people actually starting to say, hey, maybe XRP is a thing. Are you finding that sentiment out there in the market?
I really am. XRP, well, I'm really going to point to three that I'm focused on right now. And one of them is XRP. Wall Street's really paying attention. You've got, obviously there's a lot happening in that ecosystem. There's a lot happening with the XRP ledger that's extremely positive. But that's all, financial rails. And of course, we also have seen a very strong inflow in, in demand for HBAR, Hedera, which has been quite interesting, which is more enterprise. And there's another trend that I've been watching that's been very interesting, and that has been privacy tokens.
Yes.
So it seems like Bitcoin is sort of slipping a little bit because it is an open ledger, and you can see it's a public ledger. You can see everything that's going on. And there's been a bit of a focus on privacy in the last couple of months. So you've seen Monero, you've seen Zcash, but also Litecoin. A lot of people don't realize that Litecoin also has a privacy feature through MWeb that allows you to make your wallet private. And even though only a few wallets have done so, we do believe it's a trend that's gonna pick up. So privacy has also become a really interesting feature that we've noticed.
Stephen, do you think that people have, I mean, this is well, we know to a certain extent just by on-chain data that there's a lot of OG wallets out there in terms of Bitcoin that are ranging anywhere between $5,000 and $12,000 Bitcoin purchases. Okay. And what we're finding is that they're starting to activate, which typically means they're going to another digital asset. They're probably not selling out to USDC, or maybe they are, or to Tether. But do you think that is the reason we're starting to see this uptick on things like Zcash, and even Dash was up significantly? What are your thoughts there?
Yeah, look, I was a big fan of Dash years ago, and still am. I think it's a really interesting network, but we are seeing that there's a lot of people that have been in Bitcoin for a very long time that I
Mhm.
know that for years have said that 100,000 is my number.
Yeah.
And I
Yeah.
knew that once Bitcoin crossed 100,000, you were going to see, selling across some of the really old wallets. And that's exactly what we've seen. So for the year, Bitcoin's actually been, well, it's been flat, but it's actually under what it was at the beginning of the year.
Yeah.
So
Underperforming gold, underperforming a lot of the assets out there. Obviously, we've seen it in the crypto space
yeah,
for
and
sure.
that's what's happening. People are taking their massive gains in Bitcoin and moving it either into cash or into other digital assets.
I
I'm
can't
seeing a lot of
imagine
movement.
going into cash, man. Come on. Fiat? What are you thinking?
Yeah,
Heresy, I'm
exactly.
telling you, speaking that word here on this channel.
Yeah, well, people are buying. People are finally selling and buying houses.
Well,
So
okay.
I know several people that are doing that. They're like, okay, it's finally time. I'm gonna buy that house I always wanted. But they are also moving it into privacy tokens,
Yeah.
more financial tokens, more enterprise. That's why we're seeing an uptick in XRP, a massive uptick in privacy, and then of course some other tokens as well. So we're really seeing that. Bitcoin's kind of gotten to a point where, and again, I'm a huge fan of Bitcoin. I still own some,
Sure.
but it's kind of got to the point to where, uh, you know, sentiment has caught up with the actual token, and just due to the law of large numbers and the number of wallets that are out there and the number of people that are in the ecosystem, it's going to have a really hard time on a just on a percentage basis keeping up to the trend that
Mhm.
it's had over the last 15 years. And people are looking for the next thing,
Well,
and
and you have to consider too, though. I mean, look at all the ETFs that are out there. How many ETFs have you guys launched so far?
so far we've launched three.
Okay, so you've got HBAR, XRP going out, Litecoin going out. You've got one more getting ready to launch.
We've got one more hopefully going tomorrow.
You want to say
That
what it
will
is?
I don't want to say what it is just
Okay.
yet.
All right. Well, then we'll be watching very closely what's going to get launched tomorrow. One thing, though, that this also represents, I think, is just the fact that we've seen such an array of investment assets, especially around the risk space with crypto, which starts, to your point, starts to eat away at the Bitcoin narrative, not the narrative, but at least on the investor mindset. An investor mindset might have been 2, 3 years ago, might have been 100% Bitcoin. Now they're thinking, hey, I'm going to own some XRP and some Ethereum, and then I might throw a little H bar in there. So I only have a fixed pie. So that part of that is starting to move out into it. I noticed when the XRP ETF launched, and we were tracking it very closely. And basically, we have a system that measures traction in social, and the Bitcoin content accelerated dynamically. So I think the Bitcoin community was trying to basically get some narrative going because XRP was eating up the narrative on ETF launch day. So, do you think that's something that we will continue to see in the trenches around retail investment?
Yeah, I think you'll see that again in the trenches of retail investment. You've got, people that are, all the tribes of my coin is better than your coin,
Yeah,
that kind of thing. And look, I'm an investor. I'm not about all of that.
exactly, exactly.
And by the way, I still think that Bitcoin's a great investment. But for someone like me that likes to take a little bit more risk, it's gotten a little boring,
Yep.
and it probably will be boring. But for institutional investors that want a little bit more boring,
Mhm.
it's come of age. It's great. So you've got all these, Bitcoin ETFs that are out. You still have money flowing into them. It's still going to flow in. You're still going to get institutional investors coming in.
Yep.
It's still probably going to outperform the S&P. It's probably going to outperform Nasdaq and probably be around the same returns as, a basket of tech stocks.
Hmm.
But, I want to take a little bit more risk. So,
Mhm.
I'm, looking at other areas.
When you look at, because that's interesting, because this is a strategy I think a lot of investors are right now at the end of 2025 starting to kind of think about their 2026 strategy. And a lot of people have started to rotate from, risk tech stocks and risk assets in crypto and starting to look for a handful of more edgy products out there that can get some of those big upsides. I mean, if you look at everything, if you were early on Nvidia, early on Robinhood, if you were in, traditional assets, and there's a lot of communities out there in Nvidia and Robinhood and Tesla that are very tribal as well.
Mhm.
So it doesn't just happen, in crypto. But with you considering the fact that we're going to start to see maybe a different kind of investment makeup for 2026, how would you look at a portfolio now for 2026 if you were investing in crypto and TradFi? Is it a 60-40 mix? What do you think is a good balance these days?
Well, look, I'll tell you where I plan on being personally,
Okay.
and in 2026, and that's looking at the data that I have today, based on what I know, and things could change. But I'm probably going to be 40% bonds because
Okay.
I do believe that 2026 is going to be a tougher year.
Interesting.
But I
All
could be
right.
completely wrong, and again, data could change. But I also believe that we'll see what happens with the Fed, right? So if the Fed lowers interest rates by 25 basis points, I know that you're not going to have a massively aggressive Fed
Hmm.
going into 2026. If it goes
Yep.
down by 50, then okay, money printers on, and I might have a little bit more risk appetite. But 2026, I do plan on having lower risk appetite, definitely barbell a strategy with bonds, and about 60% in risk assets. And
Right.
those risk assets might look a little bit like, it will be a lot of altcoins with a sliver of Bitcoin.
Well, we were looking at the data coming in from the Fed last week. Polymarket flipped. First time we had seen the quarter basis point drop below the baseline of no change. So we are looking at that now potentially, and that is a no change in December. If that were to happen, Stephen, what do you feel happens with the markets, both trad markets and also the crypto market?
Look, if there's no change in the Fed rate in December, I'm risk off,
Risk off,
completely
because that's
risk
going
off.
to most likely push into January as well.
Oh, absolutely.
Yeah.
Now, the only thing that could change in that, if I mean, but there is an interesting aspect to that. If there is no change in December, then the Trump administration will get pretty aggressive
Yes.
in looking to change over some of the current Fed governors and bring in people that are a little bit more hawkish. So I do expect a change in 2026, but it will be a risk off environment for at least a few months.
I'm going to show the Polymarket screen just to let everybody kind of see this. This is what we're talking about right now. Last week, we were at about 53% on the quarter. I don't know if you can read that, Stephen. Let me bring it up a little bit. Last week, there it is, 53% hovering at about, yeah, last week, yeah, 53% on the quarter basis points. And then right there, it flipped. And
Yeah.
now we're on the no change starting to climb, which is now 53 and a quarter basis points holding at the 25. And if Polymarket is right, this is going to be an interesting December as we move out of the Fed rate cut potential for December the 10th. If that happens, if Polymarket is right and we have no change December the 10th, what would be your percentage of change for January?
I don't know. I'm just going to say about that right now.
I like it.
No change in December
Yeah,
creates a lot of uncertainty in the markets,
yeah.
and we're talking about risk assets probably dropping double digits.
Well, the no
So
change, just so you guys know, I'll bring it up on screen, is, the no change right now for January is still very high. It's on the top
yeah,
leading edge at 53%. Um, and that's January 28th is the, FOMC meeting, and then we remember, we skip February and we go into March. March could see a no change. So if you literally have 3 months in a row of no change,
mhm,
that would be, I believe you're right. I think it would be devastating to the market in general for
yeah,
risk assets, going forward, and, doesn't look good for April either. So this
yeah.
really rolls out right into the next Fed chair announcement.
Yeah, it really does. But look, I think no change in December just absolutely obliviates markets, and it will either force the Fed to lower rates 25, 50 basis points in January, or if they're stubborn, we
Yeah.
could see as much as 100 basis point change by
Woo!
April.
Wow. Okay. That would be pretty big. Let's go. I want to go circle back around to XRP and the ETF because this is something that has been, well, it's been a problem, I think, in general for crypto, and that has been XRP has been attacked not only from a legislative standpoint from the government, but also from the narrative standpoint from the crypto industry. Is that Ripple's a useless chain? Forbes came out, said it was a zombie chain. We've had all these things that have attacked it. Of course, now all these changes or issues have changed with a lot of the moves that Ripple has made in the last year. And then we see the validation on the ETF being so popular by institution and retail. Do you think the tide has turned on XRP and that it is now going to be one of those tokens that is more sought after?
I absolutely think it is. I mean, first of all, I'm one of those people that doesn't really trust the government. So if the government attacks something, it must be good.
Yeah,
I typically, the government tells me something, I believe the opposite.
the opposite. Yeah,
That's
there
where
you
I've always
go.
been. It doesn't matter which administration it is. And I believe that there's a strong distrust for government and media across the board
Mhm.
in America, especially for crypto investors. That's why we
Yep.
got into this. So if the government's saying, there's something wrong, and if the media is saying there's something wrong, then there must be something right. So, it actually makes me more bullish on XRP. Now, granted, we've had quite a change this last year, and so XRP is not in the firing range anymore. But still, I'm a big believer in what they're building right now.
Their infrastructure, their speed, you're talking 1,500 transactions per second. You've quite possibly one of the most widely used digital assets in the world right now. Likelihood is this is only going to scale as we start to see things in the treasury side of things start to flow into institutional capital. So I think the dark days are behind us. What's interesting to me is I'm actually seeing Bitcoiners say the word XRP.
Oh yeah,
Yeah.
I would have never said it 5 years ago, just to be
And
honest.
they're saying the word now, and, it's intriguing to me, I must say. Listen, we're a very neutral channel and, research team here, so we've been talking about XRP for years and years, as well as Bitcoin, Ethereum, Solana, some of the greater assets that are out there when it comes to digital. My question is this: you see retail that has never bought a crypto token at all seeing all of this activity happening in ETFs, approved government, ETFs, sanctioned ETFs for what we're seeing within the traditional finance system. Do you think ETFs will be the equalizer to bring the person that has never invested in crypto before in?
Oh, absolutely. It just opens the door to so many other investors. You don't have to go to, you don't have to go to an exchange to purchase and buy. You can
Yep.
actually just go to your brokerage account.
Hmm.
It opens it up to a lot of institutional investors, family offices, endowments, trust. They have a hard time investing in direct crypto because of the way that their
Right.
accountants look at things.
Yep.
But if you can show a brokerage statement, Now things have
Big
changed and
difference. Yeah.
big difference.
Huge difference. Do you think that we'll see more creative products starting to come out of the market that could circle around ETFs to kind of bolster that industry?
Yeah, absolutely. I think that's going to come in the form of either indexes or active products
Yeah.
that have a basket of cryptocurrencies, or even, there's a lot of creative products coming out too, covered call strategies. Those are great products as well, but we're going to see a lot more of that coming online. We even saw that. I don't know if you saw this, Paul, but a Nasdaq did open up options for
Yep.
both, the XRP, the HBAR, and the Litecoin
Yep.
ETFs last week. So
That's
that
huge.
options activity is going to be huge today.
Yeah, I think we're going to see some I think that will be one of the narratives that we're going to be tracking this week as we start to cover the activity on the ETFs because there's a lot of XRP ETFs launching this week and next week. So it's going to be a very active November 11, I think, products launching right now. Obviously, Bitwise, Franklin Templeton, 21 shares, CoinShares,
Mhm.
all launching. When you look at being first mover, because this has worked for IBIT and BlackRock, and it's worked for a handful of others, including if you think about Bitwise and BSOL, what they've been able to do. Do you think that is the determining factor as a success ratio for the winner, if we want to call that a winner,
Yeah.
for the XRP ETFs?
Yeah. I mean, look, there definitely is a first mover advantage. And there's also an advantage in my opinion, for the large, established companies like BlackRock. So,
Mhm.
so for instance, when all the Bitcoin ETFs were launched at once, it was interesting how the SEC lined them all up, despite the fact that
Yep.
some of us, and this is back when I was with Valkyrie,
Yep.
Valkyrie, Van Eck, and Bitwise were really the forerunners in pushing that Bitcoin spot ETF. And then the SEC lined everybody up at the same time, which really gives it a strong advantage to the incumbents, right? Like BlackRock and Fidelity. So, in this new SEC, we've had the opportunity to move forward and get a first mover advantage if you're smaller, nimbler, and those of us, and I applaud, for instance, Bitwise for launching the first Solana ETF, and
Yeah,
then
for sure.
I was really hoping that Van Eck would have a first as well. I think they're a great team, but us and Van Eck and Bitwise, I mean, we're all strong believers. We're not just sort of like, we're going to throw an ETF out there because we think it's going to make some money. We actually are true believers in this space. We've been doing it for a long time, and so it's great that we're getting that first mover advantage over other people.
Yeah.
I actually had an exchange with both Matt and Hunter from Bitwise over the last couple of weeks. Just congratulating each other for being first in our respective areas, and so yeah, I'm really excited to see that they're coming out with the XRP ETF as well, and that we're all kind of sharing in this together.
What's your feeling right now? You and I have been on a couple of shows here about the potential for how this might look. But I think at the time when you gave your estimate, the markets were considerably different than what they are today. With that being a factor and very possibly going into December 10th with no rate change, because this would give you that first 30-day window of the XRP ETF with Canary. What do you feel that's gonna look like in the 30-day? What's your new prediction?
Well, that's a tough one. I mean, the markets are really on shaky ground right now, and again, we talked about this. So we, that first day was a rough day in the markets. If the markets had at least been flat, we probably would have seen 50 to 100% more
I would
interest than we
agree.
than we
I
did.
think you could have doubled. I
Oh,
do.
oh, absolutely. I
Yeah.
mean, the interest was extremely strong,
Yep.
but even in shaky markets, there are a lot of people still investing in the space.
Mhm.
So I do believe that we're going to continue to see very strong flows. Even on Friday, the second down day in a row, we had a ton of orders coming in as far as new AUM. But I do believe that we're going to continue to see that flowing over the next week, and even all the way up until the next Fed meeting. Now that Fed meeting is going to be really important,
Yeah.
but I do believe that we're going to see very strong inflows.
Strong inflows going into that first 30 days. Obviously, this will start to play into the whole situation around how the first quarter plays out, because I think a lot of people have been relegated that maybe Bitcoin has had its top for 2025. Whether or not we see another one, and I think you actually called this on my show here. We talked about this several months ago, is
Hmm.
that you felt Bitcoin was pretty much maxed out. Maybe it gets to 140. But if it starts to reverse, we would probably be in a little bit of a skid, which is what we're in right now as we're trading at what could be 92K, because it's starting to bump into that figure right now. So continuing to fall. A lot of people on our own channel, when we put out a big poll of whether or not Bitcoin would hit 89K this week, 60% said they felt like 89K was in the cards. So that would be to your point right there. Let's talk about market trends beyond that. When you look at ETFs for 2026, because I think a lot of investors now are thinking longer holding times in some of these risk assets because they've watched what has happened with Nvidia, with Robinhood, and they're traditional investors out there now. So now they see an ETF and they're saying, wait, this XRP thing could really take off. What do you think the possibility of long-term ETF holders bringing that average up will be for 2026?
Well, I think it has a very strong chance. I mean, if you think about who's been buying, and I'll even say this: the very first day of trading of the XRP ETF, I personally bought that ETF.
Yeah.
It's easy to buy, and I'm a long-term holder.
Yep.
I'm not afraid of a dip in 2026. I'm holding this for years. So I do believe that there's a lot of other people, professional investors, institutional investors, that are going to continue to purchase these ETFs and hold them for a long time in their portfolio. So, a few dips here and there, and market uncertainty isn't really going to drive people away.
Right. Well, and I think to your point is you've got XRP up 300%, leading into the ETF year. With the move that we've seen just in the past little bit. And of course, it has been one of those tokens that has been very consistent in being able to hold price, which gets into that question of, is it finally in a stabilized, range? Meaning, could it just go into stabilizing now that it's got ETFs backing it, institutional capital coming behind it? Or do you think there's an opportunity for some bigger moves in the future, much like what we've had this year?
No, I think there's a massive opportunity for bigger moves. And going back a year, or maybe it's a little bit over a year now,
Mhm.
XRP was trading at around 50 cents, and then it
Yep.
shot up to 250 after everything was settled in the courts and the SEC, and that brought it back up to a range where it should have been. So now that we're back to being, I would call this steady, that $2 to $3 range. But once now that ETFs have come online, and once the actual economy can stabilize, then I don't think that $5-7 is out of the question for price in the
Yeah.
short run. Short run being 1 or 2 years.
From that period of November last year to where we are today, XRP up 346%, trading right now, holding well above $2, while we're seeing Bitcoin drop significantly compared to what we've seen in the past few weeks. And of course, that's the real question, I think, is we start to see charts like this occur for Bitcoin. This is the concern that I think a lot of traders have right
Yeah.
now is, are we seeing Bitcoin leading in? And if you compare this to even dominance, we started to see the really kind of this whole situation where dominance has started to push down under 50, under 60%. So do we get back down to 58, 57% and start an altcoin run? That's still questionable, I think, in the future. But with everything that we're seeing right now from a macro standpoint, that's getting less and less likely. But I know there's a lot of you guys out there that still believe we're heading for a face melter altcoin run, but I'm not necessarily in that camp just yet. Now, maybe there are some changes from a macro standpoint. Is there anything that Trump could do or the administration could do that would start to move the markets in a different direction?
Really not. I think Trump has done everything he can to try to convince the Fed to lower rates, and I'm in the camp that the Fed should be lowering rates. I don't necessarily think that they should, have taken the action that they've taken as far as
Mhm.
their holdings go. I still believe that they need to continue to sell off their balance sheet holdings to keep the long end of the curve up. But the
Mhm.
short end of the curve is artificially being kept up too high, which is why we're still in an inverted curve. So the Fed definitely needs to lower rates on the short end so that you're actually getting paid or rewarded for the risk that you're taking,
Yeah.
all across the curve. And right now you're not. So why would an investor why would a bond investor not just buy T-bills
Yeah. Yeah.
when you're not getting the same risk reward for longer dated treasuries? And until the Fed wakes up and sees that, it's going to be a really tough market. And to really pinpoint what that means is you've got all-time highs in defaults for auto loans, for
Yep.
credit card debt, and for student loans, which are all based on the lower end of the curve.
What do you make of this though? I mean, we're looking at the S&P right there. That's 40%, Stephen, since April of this year. Uh, you just don't see that in traditional finance very often.
No, 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 you really don't. And look, I think we're still in an economy that's strong, although
Yeah.
bifurcated. So, the richest people are still,
Still,
doing
yeah.
well. Institutional investors are still doing well.
Mhm.
And then but most of the country isn't. So,
Yeah.
we've got to make that adjustment. And that adjustment really comes in the form of lowering rates.
Right. And I think the point you're getting at is unless we see a massive move to the Fed, and I think the alarm bells would go off in December for the Trump administration, realizing that Powell's not going to do it. Um, and if the alarm bells go off, what kind of things could they do to really put pressure on it outside of just getting more governors in there? Even though the last poll, it was 7-13 governors that were pro 50 basis points.
That's right.
So why would we not? I mean, with that many, you would think that just the governor's vote would win the rate cut.
Yeah. Well, look, I'm in the camp of that the Fed really has no choice but to lower rates in December. A lot of other smart people that I know have said the same thing. I
Mhm.
mean, Jeff Gunlock just did an interview over the weekend where he was talking about the holes in the economy and the Fed needing to lower rates or else it's going to get much worse.
Yep.
There was a very good interview that Ann Walsh from the CIO of Guggenheim gave last week,
Yep.
saying that the Fed absolutely has no choice but to lower rates in December. So, these are people that I know and I follow and I'm in the same camp. They absolutely have to do it. And if they don't, it's going to be devastating.
Could be market carnage for sure. Ripple has now a $40 billion valuation. This is following their $500 million funding round from Citadel, Fortress, Pantera. This was a big announcement that they did at Swell this year. How much of an impact do you think that will have on people looking at Ripple and the correlated XRP token as an investment strategy? Do you think they care about what Ripple is doing? I'm
I think
assuming they do.
I think they do. I mean, you just asked the question earlier. 5 years ago, I wouldn't even consider XRP, and
Yeah.
now I do. And there's a lot of other people that were in that funding round that are in the same camp. You
Right.
you, you can't ignore the fact that financial rails are being built here. That Ripple as an organization, it's a well-run organization. If anybody's gotten to know Brad Garlinghouse, and I have, you know that he's a fantastic stand-up guy.
Yeah.
And I know that he's running a great organization. He's purchasing really interesting companies like Hidden Road
Yes.
that are building a great financial infrastructure for Ripple. So it's not just crypto anymore. It's all financial rails.
Right. Okay, so all financial rails, you look at utility versus something like Bitcoin, ETH, which are more, from a standpoint of a speculative plays. Even though ETH is very utility, I get that, guys. I'll get terrible comments on that statement. But point being is that you look at H bar, obviously what's going on with you guys on XRP, Solana, and most likely Litecoin and others that will make their way onto the ETF stage here soon. I mean, we could see some Avalanche making their way on, Chainlink, etc. What do you think it takes for a company like you? What are the criterias, I guess, to say, okay, we're going to launch an ETF and we're going to center on this one asset?
Well, one of the things that I want to know is, I mean, I want to know the people at the foundation, and I want to
Mhm.
understand how they think and what they do and what they've done in the past. Solana is a really good example of, it really wasn't a token that I was a fan of years ago, and it really got shot down. Look, it got pumped a lot by VCs,
Sure.
and then during the whole FTX
FTX. Yep.
debacle, it completely crashed, and now it's coming back. And some of the interesting things that have happened is the team that has come over, like Lily Liu, who I've known for years,
Yep.
is running that foundation. She has a great head on her shoulders. She's an amazing operator and doing a lot for that particular infrastructure organization and for the token itself. You mentioned Avalanche. Uh, there's a lot of people there that are fantastic. I know the legal team really well. I know the compliance team. They're focused on very slowly building compliance products across the board.
Right.
And even though we haven't filed for an Avalanche or AVAX ETF, others have, and I think they'll be successful.
Yeah.
And by the way, the only reason we haven't done it is just because there are so many others that have, and I just don't think that there's room for
Yeah. Being
much more
competitive.
competition there. So
Right.
it has nothing to do with our dislike or disapproval of that particular ecosystem. It's just that, there's just not
Yeah. There's
it's
too
just
much
not
in the
enough room
market,
left. Yeah,
potentially.
yeah.
Is there any tokens right now that you would say, I mean, people are saying, well, there's Hyperliquid coming up the ranks. Now we're starting to see things around Uniswap. Obviously, we already have what
Mhm.
Bitwise is doing with Uniswap, but are there any other projects out there that you think are worthy now to potentially look at ETFs?
Yeah, look, I think SWE is super interesting. It's a lot of the old Facebook team that was building blockchain
Right.
applications that have moved over. So I'm a big fan of what SWE is doing. I really love the Injective team, the SEI team. Um,
Yeah.
some of the
Yeah.
ones that we haven't filed an ETF for that I'm just interested in. I mean, look, Hyperliquid is interesting. I haven't dug in enough to decide if that's something that we want to move forward on or not, but we are, we have looked at it. Um, and then some of the privacy tokens I think are extremely interesting as well.
Yeah.
So we've got to do a lot more work there before we make any kind of decisions. But we're pretty happy with where we're at with Litecoin, given its long standing, it's decentralized, um, decent for actual money as far as tokens go. I think decentralization is really important, and Litecoin is the most decentralized out of all the privacy tokens.
Right.
So
Right.
those are the ones that we really care about.
Yeah. Explain to me, because I think a lot of people will ask this question, and this is something that cycles through. It's the process in which XRP is allocated into an ETF. So you guys have a 0.50 management fee annually. You can catch this through major brokerages like Fidelity, Schwab, Robinhood out there. It's just under XRPC. Um, what is the process? I go out, I buy XRPC. I'm not buying the token. I'm buying the ETF, but the ETF is then going out and purchasing the asset. How does that work, and when does that cycle occur?
Yeah, well, it's not a formula that's always the same. So when you launch an ETF, you start off with a certain number of shares that you create pre-trading.
Yeah.
Those shares are out there, and then you work with market makers and APs
Mhm.
that are constantly essentially arbitraging the shares of the ETF. And what
Right.
happens is if there's more buyers than sellers, then the APs will gather up an inventory and decide that, hey, we need to create shares with all of our excess inventory so that there's more shares on the market, because right now it's off a little bit.
Yep.
And this is actually what makes ETFs trade at NAV, as opposed to, publicly traded grantor trust or
Yep.
closed-end funds or other types of instruments. So that constant arbitrage and the ability to either create or redeem shares is what causes you to trade it, right at NAV.
Right.
So it's really hard to say exactly what happens, because it happens differently all the time. But essentially it is that, if there's more demand for the shares than there is sellers, then new shares will be created. And when those new shares are created, that's when that buying typically happens.
So it's like
Sometimes
an
it doesn't.
inventory.
Sometimes it's just inventory that's
Yeah.
sitting on books.
Okay. So it's an inventory based on availability. Availability starts to slim. That's when we've got to be able to backstop it with obviously the assets to create more shares and get rolling. Obviously, this is an investment advice to anybody. I know a lot of people have asked us, where can you get it? How can you get it? Those are the best ways. Is there any one exchange that you felt had the most the most volume and liquidity available on this one that you tracked on the first day?
No, not really, because what happens is behind the scenes, it's actually trading across, several, like even if you go to, Schwab or one
Right.
of these other, brokerages, uh, it's all happening behind the scenes, where they're actually creating orders that are shared with all exchanges. So it's not like going to a crypto exchange and you only have the supply of that particular exchange. These are, the financial markets that are much more sophisticated, much more interconnected. And that's why you don't have as much of a spread when you're trading ETFs as opposed to direct crypto on exchanges. So you'll when you go to, any crypto exchange, you'll notice that, spreads can be really, really
Right.
wide,
Yep.
and your cost might be extremely high, but ETFs, we're talking about pennies.
Yeah, exactly. Last couple of questions for you, Stephen. Most exciting development right now in terms of crypto, if you think about just the market in general, we're seeing payment become a huge part of this industry. What do you think will be one of the ones to watch for 2026?
Well, I'm glad that you said payments, because that's the exact reason why I got into, and I'll call it blockchain in the
Mhm.
beginning. In the early days, I was like, there is a massive opportunity here to move payments around the world without
Yep,
costing a lot of money. So I'm most interested in any kind of payment network, and XRP is top of my list.
sure. So XRP being one of the best ones out there, anything that you're worried about beyond what we're seeing in the near term of, because eventually Trump's going to get his way at the Fed. That happens next May. And when that occurs, we know what the Fed might look like, what interest rates looks like going into the summer and into the midterms. But is there anything else that concerns you right now, keeps you up at night around the markets?
Well, and this is more directly related to Bitcoin. One of the biggest issues we've had with Bitcoin all year long is mining activity. And a lot of people are saying, well,
Yeah,
the 4-year cycle's over. It doesn't matter anymore. It's always mattered. And the reason why it matters so much is because every time that there's a halving, miners are earning less on their mining activity, which means
yeah,
that they have to sell their Bitcoin to pay for energy. Well, usually after a halving, there's a strong year of price increase, and then it goes down. It's just reversion to the mean. But one of the reasons why Bitcoin has been so flat this year is a lot of the smaller and medium-sized miners have
exactly.
had to sell their Bitcoin early because of
Mhm.
AI data centers.
Yep,
And AI data centers coming online in most of 2025 have caused energy prices to skyrocket. So Bitcoin miners have had to start selling earlier than they have in the normal cycle, just to pay for that energy. And that's just one of the reasons why we're seeing the kind of trading activity that we have in Bitcoin. And of course, Bitcoin does affect every other asset. It's the
yep,
largest,
yep.
and a lot of a lot of coins will follow that price. Um, and it's not just a one beta play. It's sometimes it's a multiple to that beta, and that's why we've seen the markets like we've seen.
Well, and to your point is, and you're exactly right. And we follow the mining community pretty significantly. A lot of them have diversified, to where they're going into other areas to compete. But to your point, the issue still comes around energy costs. And if we continue to see the uptake on data centers, which right now, based on everybody that I've talked to in the tech community and in Silicon Valley, is this isn't slowing down right now.
Mhm.
If anything, is still speeding up for at least the near future, 26 and 27, because a lot of this stuff has already been committed,
That's right.
on building. So that means that over the next 2 years, you could see even a more consolidation around miners. Is that a concern if we only have 5 miners in the United States?
Well, look, I mean, there's going to be there's still going to be a lot of miners, but the commitment that you talked about is very, very similar to oil, right? And if you look at oil prices about 13 years ago, there was a lot of activity in fracking,
Yeah.
and then you had all the commitment to continue to frack because you have to buy the equipment, you have long term leases that you've already paid for. It's already sunk capital, and if you remember in 2012, the price of oil
Yep.
dropped all the way down to $25 a barrel. And p- and drilling continued to happen because the cost had already been occurred.
Hmm.
Same thing's happening in AI, just like you mentioned. The commitments have been made, the long-term leases have been signed,
Yep.
and it takes it doesn't these things don't pop up instantly. Sometimes they take
Yep.
a year or two. So all these commitments have been made, and it's just going to continue to drive energy prices higher. So that is a massive concern.
Well, it's a concern until there's an alternative,
That's
which
right.
many people think we are on maybe I don't know if you've been following this. The Saudi prince came over and met with Trump. Interesting timing around everything that's going on right now in the oil market in general, and many people thinking that maybe Saudi is trying to maybe shift their entire baseline into technology and less dependent on oil. So, is
Yeah.
there another alternative
Well,
being
well,
looked at?
well, there is, and we saw this in the Arabian states 15 years ago,
Yep.
mainly with UAE, but also with Saudi,
Hmm.
trying to diversify into things like manufacturing,
Right.
particularly aircraft engines and
Mhm.
aircraft and um, uh, tourism. And so a lot of these nation states, including Saudi Arabia, know that their future can't just be in oil, but to take the earnings from oil and to build out a diversified economy. And I'm glad that
Right.
they're doing so.
Yeah, for sure. Stephen, it has been a great one. Of course, you guys know where to find Stephen McClurg over at Canary Capital. You can find his website. We'll pop it up here. Leave a link in the description as well. If you're interested in some XRPC and some of the other ETFs that they offer, you guys can check them out again. Thanks for coming in today. We appreciate it, Stephen.
Thank you, Paul.
You bet. It's been great having you. You guys know what to do. Make sure and hit the like button on this video because it does help it get out there. And of course, if you're not subscribed to the pod, just do that right now. We'll catch you next time right here on the XRP pod. Take care.